So, this part has been covered, and I will put the link in the description below of the Wyckoff theory for this part, but in short, I will explain it to you. Essentially, what we do is we put in a long and we shoot the market up. Now, in between, we can make a short, a long, another short to make up some money, so we can prepare for this last long we can make. Here, we test out the market to make sure there's no huge selling pressure and see if there's any buying pressure. We see there's some buying pressure, but we sell off and gain on more tether to make this long push for the buy. Now here everybody's calm, nobody's buying, so we place in a short and see how low we can get it, just to ensure we can get the highest leverage possible and not get liquidated for this long. And then we place in this long and bam, now we're in the money. We got all of the bags, all of Bitcoin, everything here. So we sell it off and place in a short. Now we don't want to drive it too down, so we let the market buy back up. We place in another short, let the market buy up. Short, let the market buy up. What happens here? You see, the calm people and the veterans and the better traders will know we went up too fast. We went up too fast, too quickly, and they will be expecting the standard 20% to 30% correction. So this correction right here would fall in that range, and they will be selling around here and buying back in here. And this is exactly what we have here. 27% correction, buy back in. But now this comes. Instead of possibly trading sideways or going back up, we're going back down. Now why are we going back down? We ensured there was FUD in the market. Elon Musk tweets, China bans, India, crackdown, cryptocurrency, whatever it may be. We made sure to place in some kind of a short right here and make people panic. We make people panic and we made them sell off. So even though didn't go as expected, we still went up too quickly. It's a small correction. Just buy the dip. It's all going to be okay. But then there's no buying the dip, and we keep going down. Alright. The lowest we can go is possibly 43k, 33% correction. This is the lowest we can go. And this, exactly here, we make our final move. We short the hell out of the market. You see, all of the calm players, all of the veterans from the past bull market, all the better traders, they bought back in. They bought this dip. They bought all the way up here. See, they bought somewhere between here. They bought all of it in. Now why did they do that? Because we made sure they would. We gave them full confidence. This is the standard pullback. We might be a bit more because we manipulated the market to go too high too quickly. So they won't start panicking and they will buy back in. Meaning they got no tether, they got no way to stop this crash. They're fully in. Now what will happen here? The paper hands, the noobs, the newbies to the market who bought back in, they're going to be panic selling. They're just going to panic sell along with us, but we are shorting. Then, because the overload of the exchanges due to this panic selling, we made sure to place our buys here at the lowest peaks, and then we placed in our long for the recovery, and we made tons of money. And what did we do? Now the paper hands, those people who bought at the top, who bought Dogecoin, SafeMoon, whatever it may be, they're out. those better traders, those calm heads, those who didn't panic sell, they're fully in. But they expect more retracements. They do not think the bull run is over. They don't want to believe it's over. Because we're not even halfway in. We didn't even reach 6-figure Bitcoin. There's no real indication for them to say it's over. So, they're fully in. The panic sellers, they're out. They got wrecked. We made their money right here. So what do we do now? Well, we can follow those better traders, calm heads, whatever it may be, and then we can move sideways around this range, 48k to 40k for a couple of months before restarting and going back up, making new time highs. Good, bull run is back in, we're good. But the problem is, those better traders, those calm heads, they will be selling here and buying here, and they're going to regain all of these losses they suffered due to this. Currently, they're at least 30% losses to 50% losses. Now, the reason why it might be more than 30% is because we ensured that they suspected an altcoin season was coming. So, the losses are higher than the Bitcoin recovery here, which should be around 30%. A little bit more than 30%. So, odds are they're more than 50% in that. And these are the veterans from the past bull runs, the calm heads. They're still at a massive loss. So what do? If we follow this plan, they'll recover their losses and they'll make a hell of a lot more going back up. But they all know to take profits nearing the end of the bull run. They will never be fully in as they were right here. They will never do that again. Never ever in this bull run will they do such a mistake again. This mistake can only happen once, and it can be only made right now by what we have done. So what do? The paper hands are out and the veterans, the calm hands, are still in. And then we do the magic. We allow the people to speculate for a couple of days while leaving some bullish indicators right here around the 40k mark. And then we get the idea of an intermediary top from 2013's bull run, and then we short it again. There's some relief, short again, and then we move sideways just as we would here, going back up. Now what is the difference here? The difference here is we make a hell of a lot more money shorting here. These traders get fully wrecked, expecting this. They're fully in, they get wrecked, and then we can start accumulating back right up here and go even more here. All of these gains we get on the way up, and we get all of these gains for shorting all the way down. So we get all of the benefits from the short and all of the extra benefits of this long. And there's absolutely no downside to doing this move. Because if we let the go with the veterans and the calm heads right here, they're never going to be fully in. They're going to take profits, and whatever gains we can get here, they're going to be way smaller than these gains. Now, what is the problem with this? Well, the problem is if we short and somebody decides to buy in, like institutions, like other big money, we're not the only whales here. So we need to make them believe this intermediary top. We need to get them on the same page before we do this one final short. And we make an agreement with them to buy back in here. And they will be grateful for us for this discounted price compared to this one. And we're going to make sure we don't get wrecked. And we get all of these gains. The only downside here is if they try to do this short for them to get liquidated. But who the hell is going to liquidate them? All of these people are 100% in. All of these people panic sold. The only people who can liquidate them is those who missed out on this because we manipulated the market and they want to liquidate us. That's the only play where we get wrecked. That is the only way. when we try to do this final short, and they essentially liquidate us and take our place, and we go back into this and go back up. So the only thing we can need to be afraid of is to get this intermediary top and get some kind of consensus with them, pay them up to accumulate here before going back up. And this will be a bull market to remember. For one final note, what is currently happening most likely is because of this long that I put in, they are selling off at 40 plus K to essentially cash out before making the next short, while also observing the buying pressure. Currently you hear buy the dip, 50% discounts, etc., and you're essentially giving them cash from this long to essentially set them up for the last short, which determines this is the bear market, and nobody is going to stop their short once we enter the bear market. Nobody will want to take that risk.